When digital coins challenged old empires, it began as a quiet disturbance, a ripple against the surface of an ancient financial ocean. Most dismissed it as noise. But beneath that noise was a force gathering enough momentum to threaten the foundations of systems that had stood unchallenged for centuries. The empires of traditional finance never imagined that their challenger would be something they could neither see nor control. Today, the tension between old money and digital innovation shapes headlines, markets, and political debates. To understand why this friction keeps intensifying, we have to look back to the moment when cryptocurrency first stepped beyond its small circle of enthusiasts. Because before it became a movement, it was a provocation, a reminder that power can shift when least expected. The world of finance had long operated like a closed fortress. Banks, brokers, and central institutions controlled the flow of value, acting as gatekeepers to opportunity. They set the rules, dictated the pace, and benefited from the structure they built. The system was reliable, predictable, and resistant to change. But it was also slow, costly, and often indifferent to those left behind. Then came digital coins, not backed by governments, not controlled by corporations, not bound by borders. Their existence alone posed a question that made traditional institutions uncomfortable. What if people could move value without the fortress? The reveal began with growing adoption in corners of the world where financial systems had failed or faltered, places where trust in banks was thin, where inflation swallowed savings, where citizens needed alternatives. Cryptocurrency became more than a novelty. It became a lifeline, a currency born out of urgency rather than speculation. At the same time, the technology caught the attention of thinkers and innovators who saw potential far beyond currency. They imagined decentralized networks that could challenge everything from payment systems to global remittances. Ideas spread quickly, and with each new use case, the old empires felt the ground shift beneath them. Yet the real turning point arrived when institutions tried to decide whether digital money was a threat or an opportunity. Banks launched task forces. Governments formed committees. Analysts tried to predict whether this new form of value would fade like a trend or sharpen into a transformative force. And while they debated, the movement grew stronger, powered by believers who saw themselves not as customers but as participants in a new financial era. The rise of digital coins exposed vulnerabilities in the old financial order. Systems once believed to be unshakable revealed their age as people compared the speed of blockchain transactions to the delays of traditional banking. Transferring money across borders no longer needed days or approval from layers of intermediaries. One click could do what entire institutions had taken generations to perfect. The contrast grew impossible to ignore. As adoption increased, whispers turned into headlines. Some financial leaders mocked the movement publicly while studying it privately. Others warned investors to stay away even as their own research teams explored the mechanics of decentralized networks. The old empires were torn between defending their dominance and preparing for a future they didn't fully understand. But digital money also carried challenges that gave skeptics fuel. Its price swings were violent. Fortunes rose and fell in hours. Security breaches at poorly run exchanges added fear to frenzy. Critics used each incident as proof that traditional finance was still the safer path. Supporters countered that innovation always arrives rough, unpolished, and misunderstood. Amid these arguments, the deeper conflict began forming. This wasn't just a battle of technologies. It was a battle of philosophies. Traditional finance was built on centralization, authority, oversight, and structured control. Cryptocurrency thrived on decentralization. Open networks, shared power, and trust in code rather than institutions. These two worlds weren't simply competing. They were colliding in ways that neither side anticipated. The early signs of this clash appeared in policy discussions. Lawmakers asked how to regulate something that existed beyond their borders. Banks questioned how to maintain their relevance when customers could bypass them entirely. Even individuals felt the divide. One path offered familiarity and stability. The other offered freedom and uncertainty. Every month brought new sparks. A major company adopted digital payments. A government issued warnings. Markets reacted with sharp surges and drops, reflecting a growing struggle over the future of value itself. And beneath it all, a question echoed louder with each passing day. Was the financial world witnessing disruption or evolution? As the old empires watched more citizens explore decentralized alternatives, they realized the movement had reached a scale too large to dismiss. What had started as an outlier was becoming a genuine contender. The fortress was no longer untouched. Hairline cracks had begun to form, and pressure from the outside was increasing. The cracks widened as the movement gained speed. What traditional finance once viewed as a fringe experiment was now reshaping global conversations about money. People were no longer asking whether digital coins mattered. They were asking how much longer the old system could resist their momentum. The conflict intensified when major institutions attempted to imitate the technology without embracing its philosophy. They launched private blockchains, controlled networks, and experimental digital currencies meant to preserve their authority while adopting the appearance of innovation. But these efforts only highlighted the difference between decentralization as a feature and decentralization as a facade. The public noticed. Enthusiasts pushed back. The divide grew sharper. As the world debated, market cycles became emotional battlegrounds. During explosive rallies, some declared the old system obsolete. During crushing downturns, critics celebrated the supposed failure of the digital experiment. Each swing added fuel to the ideological fire. Supporters saw volatility as growing pains. Opponents saw it as proof that the traditional order remained superior. Neither side realized the conflict was no longer about price. It was about principle. Meanwhile, governments struggled to respond. Some embraced innovation, hoping to attract new industries. Others tried to restrict access, fearing the erosion of monetary control. The global map fractured into a patchwork of rules, creating uncertainty for both innovators and investors. For every country building a haven for digital finance, another constructed barriers to slow its rise. Inside the cryptocurrency community, the tension was just as fierce. Purists insisted that the purpose of the movement was liberation from centralized power. Newcomers, driven by profit, injected volatility and speculation into a space that had once been rooted in philosophy. Builders focused on utility clashed with traders focused on wealth. A single question hovered over every debate. Could technology born from ideals survive the weight of human ambition? This internal struggle created moments of doubt. Some early supporters feared that the movement was drifting away from its original vision. They watched institutions enter the space with massive influence, shaping narratives and pushing the technology toward familiar corporate patterns. The dream of a decentralized alternative felt at risk. Yet even as doubts grew, so did the signs of undeniable progress. Entire industries emerged: exchanges, wallets, decentralized platforms, peer-to-peer markets. Innovation spread faster than regulation could contain. Users discovered new ways to store, send, borrow, and earn, all without relying on the old empires. And with each innovation, the pressure on traditional systems mounted. The conflict was no longer theoretical. It was unfolding in real time, reshaping decisions in boardrooms, parliaments, and households. The financial world could not ignore it, could not stop it, and could not fully join it without confronting the uncomfortable truth at its core. The future of money might not belong to those who controlled it, but to those who reinvented it. All signs pointed toward an inevitable confrontation, a moment when the old empires and the new networks would collide in a way that would define the next era of global finance. The collision arrived not with a single event, but with a series of decisions that signaled a turning point. As more governments drafted regulatory frameworks, as banks released their own digital offerings, and as corporations added cryptocurrency to their balance sheets, the old empires finally acknowledged what they had resisted for years. The financial landscape had changed forever. The climax unfolded in subtle yet powerful waves. Adoption surged in regions once overlooked by traditional finance. People who had never held a bank account now participated in global markets through a smartphone. Cross-border transfers that once demanded days now happened in minutes. The question was no longer whether digital coins challenged old systems, but whether the old systems could adapt fast enough to remain relevant. Traditional institutions faced a choice: evolve or fade. Some leaned into transformation, partnering with blockchain innovators. Others clung to familiar practices, hoping the storm would pass. But the world kept moving. Younger generations embrace digital assets as naturally as previous generations embrace cash. The cultural shift made resistance feel like standing against the tide. In this new reality, a deeper truth emerged. Cryptocurrency was never meant to destroy the old empires outright. It was meant to expose their limits and inspire reinvention. The real story wasn't one of replacement, but of evolution. An evolution that began with individuals reclaiming control over how they move and store their value. The impact reached far beyond finance. It shaped conversations about privacy, digital identity, economic freedom, and the nature of trust in a hyper-connected world. It reminded society that innovation often begins on the fringes, ignored by the powerful until it becomes impossible to overlook. And now, as the world stands at the intersection of tradition and transformation, one question echoes louder than ever. What comes next? Sometimes the smallest shift in perspective becomes the beginning of a new future.